We're back at it again. Very nice. So what's going on lately in the news? That's a good question. Um, on a worldwide scene, what's going on? Let's see. Trying to think. I think a lot of countries are circling the wagons, more or less, and trying to defend their local economies and try to protect their own self-interest. Mainly because of what's coming out of things coming out of the Trump administration. Excuse the noise. Seems to be when you have protectionism going on in your local country, for better or for worse, everyone else tends to start doing the same thing. So, if I learned anything in trade finance or economics 101, I learned that, sometimes you do assist your local economies, whether or not that's farming or automobiles or whatever your main export is. Sometimes you have to focus on growing those industries and protecting them, at least while they're growing and still young. And then, on the other hand, the world has become more open than it ever has been before. So it's really hard to say, to what extent do you have complete protectionism, if there is such a thing. But because, automobiles don't ship completely intact the way they used to, if they ever did. But you got, in addition to that, we have a very large articles directory, and that includes a video library and podcasts, tons of podcasts, tons of blogs, basically a full-on multimedia center. Go to the multimedia center and take advantage of all the free information out there, the free content that we have on our website. We did a petition to, for instance, yesterday we circulated a petition through change.org to prohibit child labor exploitation in the Congo when you guys buy your cell phones and your laptops and your iPads and all of these fancy gadgets, including electric vehicles. Again, people in the developed world with your nice, bright, shiny gadgets and toys, you're contributing to child labor unless you realize that Apple and Tesla and Samsung and VW and other companies who make electronics that use cobalt are indeed exploiting child labor in the Congo. So take a look at the petition. Make sure you understand being a consumer also means being responsible, knowing what's going into your shopping bag, for instance. If it's chocolate and children are harvesting the chocolate, or if it's cobalt, where that mineral is going into the production of cell phone batteries, and again, electric vehicle batteries and laptop batteries and such. And if we don't let these manufacturers know that we demand that they treat people with respect, and that includes adults and children alike. Okay, we can't look the other way just because we want to be consumers like bulls in a china shop, where it doesn't matter. It does matter. Okay, it may be your children, it may be your family or something, or someone you know. But people really should have compassion, whether or not you know them or not. Children all have the right to grow up as children, not be carrying 10 and 20 and 30 pound sacks of rocks or whatever back and forth across miles in a mine every single day without eating. I don't know what type of world we have here, but you guys need to wake up sooner or later. This bullshit is getting ridiculous in terms of people just being too busy or medicated or something to not understand what's going on. Anyway, that's a petition that's going around through change.org. You can go to my website, go to articles, and take a look at it. I'll go to the video library and take a look at that video about children mining cobalt in the Congo. It's an 8-year-old boy by the name of Doran, I think. One of the few fortunate children who got a chance to get plucked out of there and put into school where he should be. Anyway, moving right along. Let's see, what else we have? Oh, yeah, we accept Bitcoin. Bitcoin is actually going to be helping lift people out of poverty. It's going to be helping people establish some modicum of financial sovereignty. Okay, so again, the people in developing countries, including the Congo, including Venezuela, Argentina, a lot of these countries, the Marshall Islands, a lot of these countries are really being alienated and isolated from, including Turkey, with their 25 or 26% inflation rate. A lot of these countries have been isolated from world and trade finance because the United States wants to impose its will on the entire planet, which is ridiculous. These are sovereign countries and sovereign nations, but because of the way the banking system works, and you guys need to educate yourself in terms of the dominance that the United States plays when it comes to banking and international banking, the world typically follows a lead in the United States. So that means that, if we don't like what your president or your minister or what your citizens are doing, then unfortunately we try to impose our will on every single country that doesn't comply with whatever crazy motives that we're trying to promote in the United States, as if, every country needs to be like the United States versus having their own culture, their own identity, which a lot of times is a lot older than ours. It's kind of crazy. Anyway, we accept Bitcoin in the shopping cart on our website. That includes Bitcoin, Litecoin, Ethereum, and Bcash. Go there, help promote financial sovereignty. Let's get away from the Federal Reserve. Let's get away from the central bankers. Let's get away from the Wells Fargos and the HSBCs and the other money laundering, tax evading, scam, criminal empires that dictate everything that we do in our lives. Okay, we need to get away from that. Visas, MasterCard, American Express, all these guys, merchant processors, whether it's, you name it, Elavon, merchant services that help out Wells Fargo, all of these entities are basically corrupt in terms of what they're doing to keep us financially oppressed, paying tons and tons of money just to move money around. You got to identify who you are, what you're doing, what your intentions are, where do you live. You can only send this amount to that person or a small amount to the other person, or if this country is on a banned list, you can't send it to that country even though the people are starving and you're just trying to help them. It's a crazy world we live in. Anyway, we need to get away from that. Check out Bitcoin, check out Litecoin, Ethereum, Bcash. Get yourself a wallet, get yourself a Trezor wallet, get yourself a Nano Ledger wallet. Establish some financial sovereignty, and that's alleviate financial illiteracy. In addition to all of that, let's see what else. I think that's it for now. Oh yeah, we redesigned the website so that it looks great. We're adding new features and new functionality all the time. As long as you guys patronize the site, I'll keep improving it, and we'll keep adding more new products and more choices and more variety of products. But if you're not patronize it, then it doesn't matter, because I think we're going way above and beyond the call of duty in terms of what we're offering to people if they want to take advantage of it. If they don't, then it doesn't matter. Me and my wife will just continue to travel the world and enjoy our Bitcoin wealth. Okay, let's see what else we got. Oh yeah, let's get to the article. Okay, what is the article? Today's article is called Banks sharing of financial crime data raises questions on ethics. Again, banks sharing of financial crime data raises questions on ethics. Banks, regulators, and law enforcement agencies are sharing more intelligence through voluntary networks to deter money laundering and terrorism financing. As the practice spreads, so do the risks of data mishandling, observers said. Information sharing partnerships are sprouting across the global financial landscape. The UK pioneered the practice in 2015, and new partnerships were launched in Singapore, the United States, Australia last year. The Netherlands, Hong Kong, and law enforcement agency Europol are running pilot programs with the goal of setting up hubs to share intelligence on financial crime. The partnerships are evolving as a way to share patterns of criminality without regulatory burdens. But as more data is collected, these groups are facing ethical issues of privacy, disclosure, and conflict of interest, according to experts who gathered last week at the International Symposium on Economic Crime at the Cambridge University. Do we really want vast amounts of data in the financial system to be accessible to law enforcement investigators? Is there public consent for this development in intelligence gathering capability? How robust are the accountability and governance processes? Asks Nick Maxwell, head of the Future Financial Intelligence Sharing Program at security think tank Royal United Services Institute in London. Some ethical questions concern procedures for keeping open accounts that have been flagged by suspicious transactions, for instance, because of conflicting interests. Let me just chime in for a second here. Now, what we're talking about basically here is the banks be more open to sharing information, not only amongst other banks, but with other partners. And so we don't always know who these other partners are. A long time ago, there were companies who collect license plate data. In other words, in my industry, there was companies who came out with cameras that could focus on license plates for automobiles and gather information on those license plates. And that went into huge databases. And that became very valuable information for marketing, for law enforcement, for whatever reason, right? And if you're not careful, these partnerships, that's all they really do. They gather information on innocent customers who have like a balance of $500 or less in a bank, and those millions and millions of people's information, that data goes into the hands of anybody who wants it, anybody who pays an extra dollar to get it. So these aren't the target criminals, you guys. We aren't the target criminals. 500 people who have $500 or whatever small amount of money in a bank, that doesn't mean that you're a target. That doesn't qualify. It shouldn't qualify you as a target, but it does when you're just collecting data on people and trying to share it with everybody for marketing, for supposedly terrorist-related activity and such. Okay, but what's happening is our information is being collected in a wholesale manner and being turned over to the highest bidder. And if whether it's Facebook or whoever, because Facebook actually wants to partner with banks to collect data so that they can match up with the information they have on you in that profile that you have on Facebook with the information that the banks are handing over. And guess what? Now they got a complete financial profile of you, and they know exactly what to market it to you, how much you could spend or how much you have spent on average based upon your past history of doing transactions gathered from the bank, turned over to Facebook. So now that's very valuable marketing information to social media companies. It could be Facebook, it could be Google, it could be Twitter. It doesn't matter. Once you start selling data and providing data to partners, you don't know where it's going to end up. So if I were you guys, I would complain. I would keep your eyes and ears open. Go to those Facebook websites of those banks. Call the customer service of the banks. Or go into the branch and talk about this and complain about it. And just be aware that Bitcoin doesn't allow for the gathering of all that information. If I send you $100 or $10 million, I don't need all that critical data. This is just not necessary. So let's be aware of the implications in terms of what we're saying here in this article. Do we really want vast amounts of data in the financial system to be accessible to law enforcement investigators? Okay, we talked about that. Some ethical questions concern procedures for keeping accounts open that have been flagged because of conflict of interest. Okay, we talked about that. Investigators want the accounts open to gather evidence and to avoid assets being transferred to other jurisdictions, while the banks fear running afoul of regulations if flows stem from illicit finance. What's more, closing an account prematurely can lead to great upheaval for the account holder if it is done erroneously, because he or she will need to prove it was all a mistake. So again, the burden is on the account holder. After the account is closed, the burden is on the account holder to prove that you're not part of Al Qaeda or some other terrorist network, when actually it's your 90-year-old grandmother whose account was closed, and now she's got to go through the process of getting that account open just to get those Social Security checks in there and to allow her to pay her bills and buy food. So this is getting really crazy. Establishing some policies to keep accounts open during an investigation is one way to deal with the quandary. Already, the United States Department of Treasury has keep open procedures in place, and such measures are under consideration in the UK and Australia, Mr. Maxwell said. Another area of concern is the vetting of money laundering reporting officers who report suspicious transactions to authorities. These officers haven't needed much vetting in the past, Mr. Maxwell said, but this may need to change as more institutions start to receive sensitive information from law enforcement agencies, he said. There is a risk of an intelligence breach or even infiltration by organized crime groups or foreign intelligence agencies. Now, the major problem is you can definitely have the wrong type of individuals, bad apples, who go and mask themselves or present themselves as potential employees, and they go to work for HSBC, they go to work for Citibank, they may go to work for Wells Fargo or UBS, and they will be working from the inside. They will make absolutely sure that the massive amounts of money laundering funds can go through that bank system without being discovered. And this is what's happening. This is what has been happening in the past. If you take a look at the fines and the penalties assessed to J.P. Morgan Chase, HSBC, UBS, Wells Fargo, and Citibank, and others, you will clearly see that they are getting away with massive amounts of money laundering. So all the compliance in the world, all of the data sharing and partnerships on the planet aren't going to change that, because at the very top echelon of the banks, those people have been compromised. You don't launder all of a sudden $1 billion or $10 billion through a bank without someone at the top taking a look at these large amounts of money and stamping that as okay. So let's be real. Let's understand the massive amounts of money laundering is indeed conducted with the permission or the stamp of approval from the people who manage these banks. Okay. So look at the past and look at the total amounts of money that's been flowing through these institutions, and understand that, data sharing with the regular consumer accounts, people who have small amounts of money, that's not the problem. The problem is when you have a drug cartel that needs to launder $100 billion in increments of a billion or 100 billion or 10 billion at a time. That's different. That's where the problems are. Okay. Where are we? Banks value the shift of combating financial crime through increased intelligence sharing because it is generally more effective than the compliance-mandated reporting of suspicious transactions. These partnerships are an integral part of how we manage financial crime, financial crime risk, said Ben Trim, head of financial crime policy at HSBC PLC, during a panel discussion at the symposium. The bank is part of the existing voluntary partnerships because it believes sharing is key to preserving the integrity of the financial system. Coming together with law enforcement allows financial institutions to get information on specific indicators or dangerous actors banks wouldn't otherwise have ways to access, he said. Now, this is the largest crock that I've heard in a long time. This is complete bullshit. HSBC is a major money laundering entity. Okay, they're at the top. So all of the compliance on the planet hasn't stopped. Tens of billions of dollars are flowing through HSBC. So I don't care what they say about investigating these transactions. When they see a suspicious transaction, obviously they look the other way because their penalties are humongous. Billions of dollars at a time, that's how much they pay in fines and penalties without even admitting guilt or fraud. Okay? The bank is developing a financial crime risk management system that uses the data it collects to get a more holistic view of how swindlers operate. That innovation within our bank will help us with what we bring to the partnerships, Mr. Trump said. Again, that's complete bullshit. There's no way you can have billions and billions of dollars flowing through HSBC and Citibank and Wells Fargo and UBS without people knowing exactly what's going on, okay? The focus of case building through intelligence will expand from a transactional basis to behavioral analysis. To succeed in its goal, though, HSBC will need more access to more information through the public-private intelligence sharing hubs. HSBC monitors millions of transactions and investigates every hint of suspicion as part of its compliance program, he said, but very few of these lead to fruitful investigations. The U.S. collects on average 2 million reports of suspicious transactions every year, and the UK approximately 500,000, according to RUSI, R-U-S-I, the think tank. Around 85% of these aren't of immediate value to authorities, and less than 1% of criminal assets identified through the reports are frozen or confiscated. The mandated reporting is also costly. Banks in the UK spend at least 5 billion euros a year on core financial crime compliance, according to the Law Commission, which is reviewing the practice of reporting of suspicious transactions under UK law. So again, just make sure you guys understand this last sentence is very important. The U.S. collects an average of 2 million reports of suspicious transactions every year, and the UK approximately 500,000. Okay? But 85% of these aren't of immediate value, and less than 1% of criminal assets identified through the reports are frozen or confiscated. So they're monitoring a lot of accounts, a lot of activity, doing a lot of surveillance on bank customers, and they're getting absolutely nothing for the bang for their buck. So this is the biggest smokescreen, you guys, that I've seen in a long time, and it's not going to result, as they're indicating already. It hasn't resulted in anything very vague and avoid being flagged or having those assets seized. So this is a big deal, and make sure you look at the article and pass it along and share it. And I'm going to wrap up this session. As I like to say at the conclusion of every session, keep your eyes and ears open, and you guys stay safe out there. And we'll talk to you later. Have a good day.